What if your business could get access to $100,000 in funding without giving up ownership? In this video, I will show you exactly what lenders look for, the biggest mistakes that get applications rejected, and the step-by-step path to getting you fully funded. Getting $100,000 in funding sounds like something reserved for companies that are making millions and millions of dollars every single year. But that's not necessarily the case. Depending on the lender, your business age, revenue, credit history, credit profile, cash flow, and the type of funding you are applying for, there are multiple ways a business can reach $100,000 in available financing. The important thing is understanding that you don't just apply for $100,000 and hope for the best. Your job is to build a business profile that will make lenders comfortable with lending you that sort of capital. And that's what we're going to cover today. I'll break this down into 7 easy steps, starting with the foundation and ending with how you can approach multiple funding sources strategically. Step 1, make your business look fundable. Before you apply for funding, you need to make absolutely sure that your business is funding ready. This sounds obvious, right? But it's one of the biggest mistakes business owners make early on. They find a lender advertising $100,000 in funding, immediately submit an application, get rejected, and then wonder what has happened. Instead, think like a lender. A lender is asking one simple question. If I give this business money, how confident am I that I am going to be paid back? So you want your business information to be consistent and professional. That includes having a legitimate business structure, a business bank account, accurate financial records, professional contact information, and properly reported business information. You also want to know exactly how much your business is generating. Don't guess. Know your average monthly revenue, expenses, profit, cash flow, and existing debt. Because when you're applying for significant funding, numbers matter. And if your business information does not match across many other applications, bank statements, tax documents, and business records, that can create unnecessary questions. The goal is simple. Make your business easy to verify. Step 2, separate your business and personal finances. This is another important step. If you are mixing your personal spending with your business finances, you are making it harder to demonstrate how your business actually performs. Ideally, your business should have its own bank account. Business income should flow into that bank account. Business expense should come out of that bank account. And you should be able to look at your bank statements and clearly explain what is happening financially. Why does this matter? Because lenders may evaluate your business cash flow when determining how much financing you can realistically handle. Imagine 2 businesses. Business A generates $20,000 a month, but its financial records are messy and inconsistent. Business B generates $20,000 a month also, but has clean records, predictable deposits, and organized expenses. Which one looks easier to evaluate? Obviously, business B. You want to make the lender's job easier, and the easier your financial story is to understand, the better. Step number 3, know your credit profile. Now, let's talk about credit. This is where many business owners get confused. There isn't one universal business funding score that determines whether you get $100,000. Different lenders look at different things. Depending on the product, they may consider your personal credit, business credit, revenue, time in business, cash flow, debt obligations, and other factors. So before applying, know exactly what is on your credit reports. Look for errors, check outstanding balances, review your payment history, and understand your current debt obligations. If your credit profile has problems, don't randomly apply for funding from multiple lenders, hoping something sticks. Every application should have a purpose. Instead, spending time improving the areas you can control. Pay obligations on time, reduce unnecessary debt where possible, keep credit utilization under control, and build a responsible track record of responsible financial management. Remember, getting funding isn't just about finding a lender. It's about becoming the type of borrower a lender wants. Step number 4, build revenue before chasing $100,000. Here's something a lot of videos about business funding don't tell you. Revenue matters. If your business has no revenue and you are asking a lender for $100,000, you are asking them to take a much bigger risk. But if your business has consistent revenue and strong cash flow, your funding request becomes much easier to explain. Let's say your business consistently generates you $25,000 a month. You can show where that money comes from, how much goes towards operating expenses, how much remains, and how additional capital could potentially increase revenue. That is a much stronger funding story. And here's the important part. Don't manufacture revenue. Don't move money between accounts just to make the deposits look bigger. Don't create fake invoices. Don't manipulate your financial statements. That can create serious problems. Instead, focus on building real, repeatable revenue. For example, more customers, higher average order value, recurring subscriptions, retainers, repeat purchases, long-term contracts. The more predictable your business becomes, the easier it is to demonstrate that additional capital has legitimate purpose. Step number 5, don't ask for $100,000 from one source. This is one of the biggest strategic ideas in this video. When people hear $100,000 in funding, they often imagine getting one lender to write them a $100,000 check. But business funding comes from many different forms. For example, depending on your situation, you might have access to business credit cards, business line of credit, term loans, equipment financing, invoice financing, SBA-backed financing, or other forms of business financing. Each product has different requirements, costs, and risks. So instead of thinking, how do I get one $100,000 loan? Think, what combination of appropriate funding sources could give my business access to the capital it actually needs? For example, a business might use equipment financing to purchase equipment rather than taking a general purpose loan. Another business might use a line of credit to manage short-term cash flow. Another might pursue an SBA-backed loan for a larger business investment. The right option depends heavily on your business and what you are using the money for. And that's an important distinction. Don't raise $100,000 just because you can. Raise the amount of capital that makes sense for your business plan. Step number 6, create a funding package. Now let's talk about something that could make your application much stronger. Your funding package. Before approaching lenders, have your documentation organized. Depending on the lender and your financing product, you may need things like business information documents, business bank statements, tax returns, profit and loss statements, balance sheets, revenue information, accounts receivable information, debt information, identification, and details about what you intend to do with the money. You should also have a simple explanation of your funding request. Don't just say, I need $100,000 to grow my business. That's too vague. Instead, explain what the money is actually going towards. For example, $40,000 for inventory, $25,000 for equipment, $15,000 for marketing, and $20,000 for working capital. Those numbers are just an example. Your actual allocation should be based on your business needs. The point is that lenders want to understand why you are borrowing the money and how the financing fits into the business. So prepare your numbers before you apply. Step 7, apply strategically. Now you are ready to start looking for funding, but don't make the mistake of submitting applications everywhere without understanding the requirements. Start by identifying the financing products that actually fit your business. Look at minimum revenue requirements, time in business, credit requirements, collateral requirements, interest rates or fees, repayment terms, and whether the financing is personally guaranteed. Then compare the options. And here's another important point. Don't only focus on the amount you are approved for. A $100,000 approval isn't automatically a good deal. You need to understand the cost of that capital. For example, 2 financing offers could both provide $100,000, but have dramatically different repayment costs and terms. Always look beyond the headline. funding amount. Understand the total cost. Understand the repayment schedule. Understand what happens if revenue fails. And understand any personal guarantees or collateral requirements. The cheapest money isn't always available to every business, but the most expensive money isn't necessarily the best solution either. Your objective should be sustainable financing, the $100,000 funding roadmap. So let's put everything together. If your goal is to work towards $100,000 in business funding, here's the roadmap. Step 1, make your business legitimate and financially organized. Step 2, separate your business and personal finances. Step 3, understand and improve your credit profile. Step 4, build consistent, legitimate revenue. Step 5, determine which types of financing actually fit your needs. Step 6, prepare your financial and business documentation. Step 7, compare lenders and apply strategically. And most importantly, don't think of funding as free money. It's capital, and capital has a cost. If you borrow $100,000, you need a realistic plan of how that money will generate enough value to justify the cost of borrowing it in the first place. That's what separates strategic business funding from simply taking on more debt. So if you're serious about getting business ready for funding, don't start by filling out random applications. Start by getting your financial house in order. Know your numbers. Know your credit profile, know how much you actually need, know exactly what you're going to use the money for, and compare financing options carefully before signing anything. Because the goal isn't simply to get $100,000. The goal is to get access to capital that helps your business grow without putting the business under unnecessary financial pressures. If you found this video helpful, hit like, subscribe for more videos, financial tips, personal finance tips. I'll see you in the next video. Cheers.